Beneath Switzerland, deep in the mountains, there are massive vaults. Inside them, billions of dollars in cash, gold bars, and documents no one knows the names on. Half of the Gulf's wealth is hidden there, and no government, no court can reach it. Today, I'm revealing the secrets of those vaults. In this video, you won't just see numbers, you'll learn how it works, why no country can stop it, and why some accounts are protected even after death. If you're ready, welcome to the world's most secret financial system, Switzerland, the world's most neutral country. Remained neutral in 2 world wars, joined no military alliances, protected its own currency. But its real power lies elsewhere. Banking secrecy. In 1934, the Swiss parliament made a historic decision, the Banking Secrecy Act. This law made it a crime for bank employees to disclose customer information, meaning even a bank manager could face prison for revealing who their customer is. Penalty? Up to 5 years. Why was this law created? The official explanation was to prevent Nazis from seizing Jewish wealth, but the reality is much more complex. Switzerland is a small country with no natural resources and limited industry. But it has something: geographic location and neutrality. In the center of Europe, not participating in any war, a safe harbor. After World War II, the system solidified. Wealthy people from all over Europe moved their money to Switzerland. It continued during the Cold War. Russian oligarchs, Latin American dictators, Asian businessmen, everyone chose Switzerland. But the real explosion happened in the 1970s. Gulf countries discovered their oil reserves. After the Arab-Israeli wars, oil prices skyrocketed, and suddenly, billions of dollars fell into the hands of Gulf royal families. So where did they put this money? Switzerland. The 1973 oil crisis. OPEC countries restricted oil production, prices quadrupled. Saudi Arabia, Kuwait, UAE, Qatar, they became rich overnight. But they had a problem: keeping this money in a safe place. In their own countries? Number. Because the region was unstable. Coups, wars, regional conflicts. In America? Partially yes, but there were political risks. In Europe? Better, but there were tax issues. Switzerland was perfect, neutral, safe, guaranteed privacy and tax advantages. In 1975, $12 billion were transferred from Saudi Arabia alone to Swiss banks in a single year. This was an astronomical figure for that time. And this was just Saudi Arabia. Kuwait, UAE, Qatar were sending similar amounts. Swiss banks didn't miss this opportunity. Special private banking departments opened in Zurich, Geneva, and Lugano. These departments served only very wealthy clients. Minimum account opening amount, $10 million. But in return, the services offered were incredible. Each client was assigned a dedicated account manager. This person served only that client. Available 24/7, could handle all types of financial transactions, offered complete privacy guarantee. And most importantly, client identity didn't appear in records. Only an account number existed. The most famous feature of Swiss banking: numbered accounts. How does this system work? When you open an account at a normal bank, your name, surname, ID number are recorded. When you make any transaction, this information appears in the system. But with numbered accounts in Switzerland, it's different. When an account is opened, you're given a special number, a 6 to 10-digit code, and from then on, all transactions are made with this number. Even bank employees don't know who the account holder is. Only a few senior managers can access this information. So how does the account holder transact? 2 methods. First method, in-person visit. When the account holder comes to the bank, they're taken to a private room. Identity verification is done, but this information isn't recorded. After the transaction, all documents are destroyed. Second method, using a special code. The account holder is given a special password system. They can transact via phone or secure internet using this password. But still, identity information isn't recorded. Gulf wealthy love this system, because sometimes they don't want to show their accounts even to authorities in their own countries. Due to family disputes, inheritance lawsuits, or political risks, complete privacy may be needed. An example: A prince from the Saudi royal family opened an account in Switzerland in the 1980s. He put $500 million in it. For 40 years, no one knew about this account's existence. When the prince died in 2020, he mentioned this account in his will. Other family members were shocked, because no one knew about such wealth's existence. Money isn't just stored in digital accounts. There are also physical assets: gold, jewelry, valuable documents, artworks. Special vaults are used for these. In the center of Zurich, there's an ordinary-looking building. From the outside, it looks like an office building. But 15 meters below the ground floor is a massive vault system, spread over a total area of 200,000 square meters. To access these vaults, you first go through identity verification. Then, you take a special elevator. The elevator takes you to underground floors. Each floor has a separate security system: fingerprint, iris scan, voice password, all required. Vaults come in different sizes. The smallest is the size of a shoebox, the largest is the size of a room. And the rents are incredible. $5,000 annually for a small vault, $50,000 for a large vault. So what's inside them? Gold bars. Most vaults are full of gold, because Gulf wealthy trust gold more than money. In a crisis, money can lose value, but gold is always valuable. Jewelry, diamond necklaces, sapphire rings, pearl bracelets, total value billions of dollars. Valuable documents, real estate deeds, company shares, private agreements. Some documents are so important that only a few people know of their existence. Artworks, small paintings, sculptures, antique pieces. Some vaults even have Picasso paintings. The most interesting are emergency vaults. Some Gulf wealthy rent special vaults to be used in case of a possible crisis. They put cash, passports, gold, and valuable documents inside. So in any emergency, they can immediately come to Switzerland and open this vault. But the biggest fortunes aren't stored in accounts or vaults. They're hidden in much more complex structures, offshore companies. Let's go through an example. There's a businessman from Saudi Arabia. He has $5 billion in wealth. So does he put this money directly into his Swiss account? Number. Because then there would be taxes, legal responsibilities, and transparency issues. Instead, he sets up this system. First step. A company is established in the British Virgin Islands. Its name is something ordinary like Global Trading Limited. The owner of this company doesn't appear in records because a nominee director is used, meaning on paper someone else appears to be the owner. Second step. This company buys shares of another company in Luxembourg. This second company is under the management of a foundation registered in Panama. Third step. The Panama Foundation opens a bank account in Switzerland, and the actual money is deposited into this account. Result. The money is in Switzerland, but who owns it? On paper, a foundation. Who owns the foundation? A Panama company. Its owner, Luxembourg company. Its owner, Virgin Islands company. Its real owner, nobody knows. It can take years to unravel this structure, and often it can't even be solved because each country has different laws. Companies don't cross-reference each other. Documents are scattered. Gulf wealthy use this system a lot because it provides both tax advantages and complete privacy guarantee. But what if the account holder dies? Normally, the wealth passes to heirs, but in Switzerland, it's different. According to Swiss law, a person can establish a special trust fund. The purpose of this fund is to protect wealth within certain rules. And its most important feature, it remains active even after the account holder dies. How does it work? Let's say a Gulf prince wants to leave $2 billion in wealth. But he has conditions. Money should only be given to children after age 40. If children are gambling or using drugs, money shouldn't be given. Only 60% of money goes to heirs, 40% spent on charity. Under normal circumstances, who would control these conditions? But in Swiss trust funds, a special trustee is appointed. This person or institution controls all conditions, and if conditions aren't met, they don't give the money. In 2019, a prince from Saudi Arabia died. In his will, he wrote that he was leaving his $3 billion account in Switzerland to his children, but he had a condition. His children must be responsible businessmen like their father. If they gamble, drink, or spend irresponsibly, The money should be cut off. The children went to court. "This is our right. We want the money," they said. But the Swiss court refused. Because trust fund laws didn't allow it, the trustee is conducting investigations, monitoring the children's lifestyles, and still hasn't given the children money. This system is very useful for Gulf wealthy, because they want to keep their families' future generations under control. In 2016, an earthquake happened. Panama Papers. 11.5 million documents were leaked. Among them were offshore accounts of world leaders, billionaires, and celebrities. Gulf wealthy were also affected. Among the documents were dozens of names from the United Arab Emirates, Saudi Arabia, and Qatar. A total of over 700 offshore companies emerged. But what's surprising, nothing happened to anyone. In Western countries, some leaders resigned, some businessmen underwent investigation. But what's surprising, nothing happened to anyone. In Western countries, some leaders resigned, some businessmen underwent investigation, but in the Gulf, nothing. Because in these countries, royal families and senior officials were untouchable. Also, another truth emerged. The leaked documents were only the visible part of the iceberg. Real big fortunes were hidden in much deeper layers. A journalist analyzing Panama Papers noticed something interesting. The biggest Gulf wealth wasn't in the documents, because they were using much more sophisticated structures, places more secure, more secret than Panama. Swiss bankers were also relaxed, because the Swiss system was untouchable. The country wasn't a European Union member, had its own laws, and most importantly, its economic power was very large. A small country, but finance sector enormous. 10% of GDP came from banking. But in recent years, the wind has changed. America and the European Union began pressuring Switzerland. In 2018, Switzerland made a historic decision. Automatic Information Exchange Agreement. According to this agreement, Switzerland would share bank information with certain countries. But the details mattered. Only new accounts were covered, old accounts untouched. Gulf countries were outside the agreement because these countries didn't accept the reciprocity principle. Shared information was limited, only general information like account balances, interest income. So the system changed but fundamentally remained the same. In 2020, another development, FATF, Financial Action Task Force, threatened to put Switzerland on the gray list because insufficient control was being done on money laundering. Switzerland reacted, new laws were passed, audits increased, but still the really big accounts weren't touched because these accounts were too valuable. Banks didn't want to lose these customers. Gulf wealthy weren't comfortable either. Some started shifting their money to other countries, Singapore, Hong Kong, Dubai. Alternative financial centers were strengthening, but Switzerland is still the first choice because there's 700 years of stability, trust, and experience. So how much Gulf money is in Swiss banks in total? Official figures, around $200 to $300 billion. These are figures announced by the Swiss Central Bank, but experts say the real figure is much higher. A financial research firm published a report in 2022. According to the report, there's a total of $500 billion in Gulf capital just in numbered accounts and offshore structures. According to another analyst, this figure could even exceed $1 trillion, because much wealth doesn't appear in any records. Distribution by country, Saudi Arabia, $250 to $300 billion, largest share. UAE, $150 to $200 billion. Kuwait, $80 to $100 billion. Qatar, $60 to $80 billion. Bahrain and Oman, $20 to $30 billion. These figures are only estimates. No one knows the real numbers. Maybe they never will. Despite all this pressure, leaks, and regulations, why do Gulf wealthy still prefer Switzerland? First reason, security. Switzerland hasn't entered any war for 700 years. No coups happened. Political stability complete. When you put money here, you know what will happen tomorrow. Second reason, professionalism. Swiss banks have been doing private banking for 200 years. Experience, expertise, and service quality very high. Third reason, diversity. You're not just opening an account. Investment management, real estate consulting, art collection, tax planning, everything under one roof. Fourth reason, privacy. Still the best privacy in Switzerland. Even with new regulations, the basic system hasn't changed. Fifth reason, geography. Switzerland is in the center of Europe. 2 hours to London, 1.5 hours to Paris, 1 hour to Milan. Gulf wealthy come to Europe frequently. Switzerland is a perfect base. Of course, this system is controversial. Critics say this money is being evaded from taxes. Money that should go to countries' public services is sitting in Swiss vaults. Defenders say this money was earned legally. People have the right to store their wealth wherever they want. But the reality, the gray area is very large. Some money is completely legal, but some is suspicious. Bribery, corruption, theft. Corruption is very common in Gulf countries, and this money is being laundered in Switzerland. In 2023, an NGO published a report. According to the report, 30% of Gulf money in Swiss banks could be from suspicious sources, meaning some of this money may have been earned through illegal means. But proving it is very difficult, because the system is already built on secrecy. Who will prove it? Which court? By which law? The Swiss government is also in a difficult position. On one hand, there's international pressure. On the other hand, the finance sector is the country's lifeline. If banks close, hundreds of thousands of people become unemployed. So will this system continue in the future? Experts foresee two different scenarios. First scenario, slow dissolution. As international pressure increases, Switzerland will make more concessions, information sharing will expand, audits will increase. Eventually, the system will lose its current form. Second scenario, restructuring. Switzerland will modernize the system but keep the essence. It will become transparent in some areas, but basic privacy will continue. And Gulf, wealthy will continue working with this new system. Currently, the second scenario seems more likely, because Switzerland doesn't want to lose a very valuable customer base, and Gulf wealthy are having difficulty finding alternatives. Singapore is strengthening but not as reliable as Switzerland. Dubai is developing but far from Europe. Hong Kong existed, but China's control increased, trust decreased, so Switzerland is still unique and will probably maintain this position for the next 20 to 30 years. So there's the secret wealth system in Swiss banks. Billions of dollars, massive vaults, numbered accounts, and complex structures no one can know. Gulf wealthy are hiding their fortunes here, and the system protects them. Is this system fair? Is it ethical? Controversial? But the reality is, it's very difficult to change, because there are very big interests, both Switzerland's and the Gulf's. If you enjoyed this video, don't forget to like and subscribe. And if you want more videos like this, could you please hit that like button and let us know? Because in upcoming videos, more hidden wealth, offshore accounts, and financial secrets await you. See you in the next video.